India, the soon-to-be most populous country in the world, may soon face producing enough food for its people.
India is the second largest producer of wheat in the world. The center has lowered its wheat production estimates by 5.7%.
Hey guys, today we're going to look at a very interesting company and a future multi-bagger that is in the agriculture space. The stock price of this company has gone up by 90% in the last 1 year, from 338 rupees to 645 rupees today. The company is currently trading at a market cap of 6,000 crores and is currently engaged in the export of agrochemicals and non-agro products such as conveyor belts, rubber belts, sheets, dyes and dye intermediates to various countries across the world. Now the company has also given a beautiful return on equity of 20% and a lot of superstars have invested in this company. Now, do you want to know more about this company? Let's go through it as well. First, let's understand the problem with the sector. India as a nation has a huge population, and this huge population has a massive demand for food crops. The demand for foodstuff would rise by 50% by 2050 due to the rise in population and to higher income. But wait, there's a problem. Agricultural land is shrinking because of industrialization and development. Now, industrialization obviously comes at a cost, and that cost is pollution, which is affecting the crops that are grown. Now, crops are majorly affected by pests, insects and other diseases, which creates a lot of wastage, and we can't afford any wastage of food because the demand is growing and the supply seems to be limited. Weed, bugs and diseases are the three major problems for crop damage. Now, to solve that, we have herbicides for weed damage, insecticides for bugs and fungicides for diseases. Now, farmers need good agrochemicals to solve this problem, and this problem is massive. Ram Prakash and Sharda Bubna in 2004 launched a company called Sharda Worldwide Exports, catering to agrochemical and non-agrochemical business. Now, let's understand more. Now, let's understand a bit about Sharda Chemicals, right? Now, Sharda Cropchem has basically two business verticals. One is the agrochemical segment and one is the non-agrochemical segment. Now, if you look at the agrochemical segment, the company markets a wide range of formulations and generic active ingredients globally, which are fungicides, herbicides and insecticides to protect different types of crops. Now, they also do specialty markets as well and also invest in biocides. Now, it has a wide range of product and focuses on identifying generic molecules by preparing dossiers, seeking registrations and marketing and distributing these formulations or generic active ingredients. Right? Now, diving deep into Sharda Cropchem, we will see that the herbicide business basically contributes to almost 50% of their revenues, and it's now growing year on year very well. Now, this is because the global demand for herbicides is the largest right now in the market. Now, let's look at what's happening in the non-agrochemical space. Now, in the non-agrochemical space, they basically procure and purchase conveyor belts. They do a lot with general chemicals and also with dye and dye intermediates from Chinese and Indian manufacturers, and then they supply them to more than 30 countries, which includes Northern America, Europe, Latin America, Australia and Asia. The agrochem business basically contributes approximately 85% of the total revenue, and the non-agrochem just contributes about 15% of the total revenue. But now let's understand why is Sharda Cropchem so unique, and to understand why they're so unique, we need to understand the business model of agrochemical industries. First, if you look at the agrochemical value chain, they have something called as basic and applied research. Then they have a process called identification. Then after that comes registration. Then active ingredient manufacturing or AI manufacturing. Finally, they come to formulation and packaging, and after that they completely go and distribute this entire thing. Now, if you look at the entire value chain, Sharda operates in basically identification, registration, formulation and packaging and marketing and distribution. So they basically take over almost the entire market chain or the entire value chain that is currently there. The things that they don't do are basic and applied research and active ingredient manufacturing, which they're currently outsourcing it to other people. But if you look at the focus, they're current focus is a very asset-light business model where they focus on identification of these generic molecules, they prepare dossiers, seek registrations, and then with marketing and distribution, they spread it across the world. They also the entire manufacturing of AIs and formulation is currently outsourced, and that is how they're able to keep such a heavy profitable model right now. Now you might assume, Shashank, why can't anyone else just come and do this, because they anyway don't have a manufacturing plant, everything is outsourced, so it's very easy for a new competition to come in the market and start doing this, right? No, you're actually wrong, because let me tell you what is the defensible part of this sector, right? Now, if you think about this, the barrier to entry for this particular segment is experience, timing, and long process and high cost. Now, what is long process, high cost, timing? Let me explain, right? Now, the cost to register these formulations and active ingredients is very, very long, right? This is because the agrochemical sector currently is a highly regulated market, and the registration is very important with respect to efficacy, safety, and environmental impact for each crop application. Now, the registration process is very capital intensive and requires huge financial commitments varying from $100,000 to almost $5.6 million. Now, the second problem here is the long registration schedule. Now, the registration procedure basically takes approximately 4 to 5 years from identifying a good product in the market to making it available as a final product as well. Now, over the years, this company has focused on building its relationships with different regulatory bodies so that they can reduce this time of 4 to 5 years into a faster process. Now, we cannot see any new player that comes into the market that can navigate this so easily unless it is a big branded player that comes into the market. Now we understood why the sector is defensible. Next, let's understand why the stock is defensible itself and what are the key USPs or moats that the stock is operating in. Now, let's understand a bit of history. The main job of Sharda Cropchem is to identify these different active ingredients, make someone else manufacture it, and the strength lies in distribution. Marketing and distribution is the key strength of Sharda Cropchem. Now, if you look at the past, right, they used to use a lot of third-party vendors and distribute their products. But what was happening was this was very inefficient in the past, because if you use third-party vendors, you are at the mercy of the third-party vendors to actually sell your goods. Now, after 2008, Sharda took a call to do forward integration and set up their own sales team across the different countries that they're operating in, reducing the inefficiencies and increasing their margins as well, because now they don't have to give that commission as well to the third-party vendors. Now, they currently have approximately 500 different third-party distributors, and they have approximately 400 plus sales force that are currently operating in different countries. Now, what is their main strategy? The main strategy for Sharda Cropchem is basically to become this one-stop solution provider, which is factory to farmer, which will help them improve their execution capabilities, support their margins, and ensure that product expansion happens in a very beautiful way. Now, finally, they have also started expanding into the biocide segment. Now, this is a small, very niche market, but it is growing at a super pace right now, and everyone is slowly investing into the biocide market as well. The key driver for increasing demand for biocide is basically the eco-friendly chemical products that have a greater yield in the market. Now that we've seen the USPs or the moat of this particular stock, let's also look at some of the problems that Sharda Cropchem is facing. Why? Because we do a 360-degree review of any stock. Now, majority of their revenue, of Sharda Cropchem's revenue, actually comes from Europe, which is almost 50%, and this is giving them great margins. Now, obviously, you'll be like, oh, this is awesome because they're doing a lot of exports. But wait, over the years, because of the change in their product mix, their revenues from EU or Europe is actually declining, and their gross margins have gone down to 33% as of Q2 FY22. But their revenues from the NAFTA region has significantly gone up, but the gross margin in the NAFTA region is only 28%. So basically, Europe, which was giving them a lot of revenues and great margins, has now reduced, and the margins have reduced, whereas NAFTA region, which is not very good with great margins, but is increasing with revenue. So this is currently what is happening right now. But the management basically expects that the NAFTA region margins will significantly improve from 28% and actually go up much more. Now, problem number 2. You remember the non-agrochemical business that they had, the conveyor belt one? So the margins in the conveyor belt business have also been affected a lot. Why? Because the freight cost has gone up a lot due to inflation. Now, 15 to 25% of the increase in freight cost has been absorbed by Sharda Cropchem itself, which has reduced the margin business of the conveyor belt business. Third point. They depend a lot on China because most of their suppliers are coming from China itself, and this is a massive key risk in the current market situation. Now, Europe is the most expensive geography that they have. But you remember that problem that I told you about, which takes a long time for registration? The same thing is going to increase even more. Europe has just come out and said that the registration process might go up from 5 years to now 8 to 9 years. And the cost of registration, which was approximately 1 million to 5 million, is now going to be minimum 4 to 6 million. Now, this is obviously going to create a significant impact for the Sharda Cropchem stock as well. Now that we've understood the USP of Sharda Cropchem, let's look at what are the growth prospects of Sharda Cropchem. Now, there is a very interesting thing that's happening in the market where 22 different patents in the active ingredient space is expiring by 2030. That means if 2030 all these patents expire, then a lot of players like Sharda Cropchem can now just develop the generic formulations of these companies and start selling it and make an additional income without spending that 4 to 5 years and $1 to $5 million in revenue. Second, India is now the 4th largest producer of agrochemicals and has emerged as the 3rd largest exporter of pesticides. It has become a major hub for pesticide generic production. Now, more specifically, in most of the different regions, a lot of patents are expiring, as I told you, and this is going to give a vast opportunity for Sharda Cropchem to now increase their revenues by 2030. Now, in India, generics for those products will actually fuel massive growth because those guys can't enter India easily, and Sharda's already here. So all they have to do is make a generic version of that formulation and start marketing it into India, and India is going to have a massive growth boom as well with respect to the agrochemical space. Thus, we can say that the healthy growth opportunities will be thrown up for Sharda as many products are coming off patent soon. Apart from this, let's quickly look at another infographic, right? And why do we feel that this company can do really well in the future? Now, the market share has improved across key territories driven by a prudent procurement strategy, so the distribution and marketing efforts are increasing over time. New registrations and additions of distributors drove strong volume growth in this current FY22 year as well, which was a 53% year-on-year growth. Third, we see healthy demand along with remunerative crop prices would sustain growth momentum in FY23. And finally, with the strong uptick that we're seeing currently now in the global agri cycle, we have seen that the company is currently in a sweet spot to dominate the next few years. Now, in the last 5 years, the revenue of Sharda Cropchem has grown from 1,500 crores to 3,500 crores, which is more than 100% return. From FY13 to FY17, their EBITDA margin, which is earnings before interest, tax and depreciation, grew from 18% to 22%. But after 2018, their EBITDA margin, which was actually 22%, slowly fell down to 19%, and this was mainly because of the adverse climate impact, rising raw material cost and higher capitalization cost. By the way, they have also been maintaining a consistent dividend payout of 20%. Sharda is basically a debt-free company with reserves of approximately 1,800 crores, and their promoter shareholding is also awesome at 74.82%, and institutional shareholding is approximately at 16%. That means the retail shareholding is very less, approximately at 10%. And currently, they're trading at a price to earnings ratio of 16.7, which is actually lower than all their peers. Now, the FY23 capital expenditure is approximately 380 to 450 crores, and the FY22 capex was 413 crores. That means they are expanding their reach and they're expanding their capabilities to actually go more to actually increase their revenues. Now, compared to its peers, currently they're trading at a very undervalued position right now with a healthy return on capital employed and a healthy ROE percentage as well. And by the way, they're also doing great margins. So guys, this was a quick research and fundamental analysis of Sharda Cropchem. It was done in a slightly different style, so I hope you guys appreciated this style. And if you did like the way we presented this, put in the comments below and also give us the names of other stocks that you want us to do fundamental research or fundamental analysis of. By the way, whatever we have done here is only for education purposes for you to understand how the agrochemical business works and how Sharda Cropchem is doing really well. This is not a financial advice, so please do not go and buy stocks after this episode. Right? So I hope you guys enjoyed this episode, and if you did like the new content delivery style, click on that like button and share this with your friends so now they start getting educated about the agrochemical space. This is me, Shashank, Udupa, signing off. Take care. See you later. Bye.